look out my window.
Hello traders, Gary Wagner with WFGForex.com, your daily market update for Forex Gold. It is Tuesday, the 29th day of June, and this is the Daily Report. Forex Gold is trading nominally higher this morning, trading roughly at 1239.50. It's an interesting candlestick that's forming in that we have a doji, and a doji is a candlestick in which the open and close are either equal or very, very close to being equal. This is an interesting scenario for our marketplace, as we have seen this many, many times, as we have seen this ascension as the market has moved to higher highs and has moved to new historical highs throughout this last couple of trading weeks. What I find very interesting in this doji, and we've seen it, as I say, a couple of times before, is that every time this market attempts to correct and correct strongly, we get safe haven buyers coming into the market. We have not been able to have any kind of a sustained correction since this wave 4 that we hit right in here, but we've had these single days, maybe a double day of a small correction, but we've not been able to maintain any kind of a solid, strong connection. Now, we have some very, very interesting fundamental markets in play right now. First of all, we have European Union debt, which is supposedly supposed to be repaid back this week. Traders are very anxious to see exactly what is going to happen there. Again, we had the dollar strengthen, and at the same time, we're not seeing that inverse relationship that we have historically seen with gold, meaning gold moving down when the dollar moves up. Now, in terms of fundamental positive news for the gold market, we did see our stock market under some strong selling pressure. We had some news that China's leading economic indicator was revised downward, and there was also some data, economic data out of Japan, that China has been a major consumer of raw commodities. So any slowdown in the economy will have a negative implication for other major economies all over the world. This market simply doesn't want to sell off. If we look at scenarios in which we have seen the doji, typically the doji, when found in an evening position, such as right in here, we've got a shooting star in here, a smaller doji here, a couple of dojis here. We also find them at the bottom. They are typically indicative of markets that are about to turn around. If we take a look at the areas that we found dojis typically, and you will find them scattered throughout, but as you can see, you will see them at tops and bottoms of the markets. The doji, again, is a point in which there is a shift in power from the bulls to the bears. However, in this last recent ascension upward, we have seen them, as the markets moved up, as kind of a consolidation area before another really strong move back to the upside. And let me show you what I mean. As the market moved up here, we saw these two dojis, and it continued to move up higher for a couple of days. Again, consolidation here. It comes down, but it moves back up. The doji, whereas we typically saw it really at tops and bottoms of the markets, you see as the market moves, you get a little consolidation, then this push up. Again, a doji right in here, a double set of dojis here. So we are getting a lot more activity where a doji is signifying a shift and more consolidation in the market than a reversal in the market. However, we do have this doji today, and we absolutely need to pay close attention to it right in here. On Friday, we will get a little bit more information to let us know where our economy is headed, because we've got the U.S. jobs report coming out, and the report's expected to show a decline of around 100,000 non-farm payroll in terms of employment. And of course, that is going to provide some interesting information into the market. And traders realize we have an unprecedented move in the market right now. When we look at our daily chart, we have got from this low that we hit in what we're calling our wave 1 back in February, a single move upward, which is probably one of the strongest moves ever witnessed in gold, in that we've got basically almost a 5-month straight uptrend in the market. So technically, the gold bulls still have overall solid technical advantage. In terms of technical indicators, they're all very, very strong to the upside still at this point. So traders, what are my recommendations? I do believe that the best way to try to re-enter this market is going to be on what's called a limit order. Over the last couple of days, if we look, we've had these lows here. We've had this low today below 1230, here below 1230, and here below 1230. So to try to place a trade on a limit order, because it seems to have that safe haven buying coming in at 1228 and 1229, if, and it's a big if, but if we're able to see the market go back to that area, that should be a good place to try to enter the market, because that seems to be the lows in which we find superlative support and the market tends to come back up. So to try to place a trade in the area of 1229 to 1230, 1228, any of those areas, I think is a good bet. So you can go ahead. We're going to try again to place a limit order and purchase Forex Gold at 1229. This has been Gary Wagner with WFGForex.com, your daily market update for Forex Gold. As always, wishing you good trading. Bye-bye.